The thought of purchasing your first home can be overwhelming, and rightfully so. It's one of the most expensive purchases you will make in your lifetime. But allow me to break down the process into 9 easy steps to give you the confidence moving forward with your purchase. My name is Jocaro Dodd, Maryland realtor, helping you build wealth through real estate. Let's get into this video. Step number 1, find a realtor. A lot of people say you should start by saving up for a down payment, but if you're new to this process, you may not be sure how much money you need to save or if you already have enough money saved. So for this reason, I recommend you contact a realtor. You can get a realtor through referral from a family or friend, social media, or YouTube. Ideally, your realtor will schedule a consultation with you where you'll discuss your wants and desires for your home as well as your finances. During this discussion, based on how much money you tell your realtor you make and how much you're currently paying in rent and how much you want your monthly mortgage payment to be, we can narrow down the price point of homes you should be looking at and then determine how much money you'll need for a down payment. In addition to a down payment, and not every realtor will tell you this, but I always recommend to my clients that in addition to having a down payment, that they have an emergency fund or a rainy day fund. I recommend saving at least 3 months worth of your essential expenses. This should cover you in the event of job loss as well as unexpected repairs for your home. Now, I understand you cannot prepare for everything, but a 3 to 6 month rainy day fund can help soften the blow of job loss or major repair to your home. This consultation is also a great opportunity to interview your agent. Ask them about their experience and their knowledge of the area that you want to live in. You can also ask for referrals from past clients and ask how they will help you avoid common home buyer mistakes. If you're wanting to purchase a home in Maryland and you're looking for an agent, I'd love to speak with you to see if we're a good fit. You can schedule a virtual consultation with me using the link in the description below. After you speak with your realtor and you have a better understanding of your market and the process, you're ready for step number 2. Determine your budget and organize your finances. You will need 3% to 3.5% of the purchase price of the home for your down payment. 3.5% of the purchase price will vary depending on your market. I live in and serve Maryland. An entry-level home in Baltimore City versus PG County can be a $150,000 difference in price. So figure out how much you'll need based on where you want to live. During this step, I also want you to create a budget so you can determine how much money you're comfortable allocating to your mortgage per month. You should know this before you meet with your lender. The lender will look at your income, assets, and debt and use that to determine how much house you qualify for, but your income, assets, and debt don't tell the whole story. If you have children and you pay for daycare or private school, the lender isn't going to account for those expenses. So it's important to know what you want your maximum monthly payment to be rather than letting the lender tell you what you can and cannot afford. Step number 3. So you've met with your agent and saved up some money, or maybe already had the money saved, and you know how much you want your monthly mortgage payment to be. You're ready to take the next step to start talking to lenders. I recommend getting 2 to 3 quotes to find the best option for you. The agent you choose should have 2 to 3 lenders in their network that they can refer to you, and you should talk to your bank or credit union. You'll need to provide a copy of your ID, last 2 pay stubs, last 2 years tax returns, W-2s for the past 2 years, and your most recent bank statement. They'll do a credit check, and after evaluating your financial profile, will issue a pre-approval letter. You should also ask each lender for a pre-application worksheet. This worksheet will include a breakdown of your estimated monthly payment and include estimated taxes and insurance. It should also include the lender's fees and cash to close. Pay close attention to the interest rate and cash to close. One lender may offer a lower interest rate, but in reality, they have hidden that rate buy down in the closing costs, which would make the estimated cash to close significantly higher than the other. Once you have that pre-approval letter, you're ready to move on to the next step. Step number 4. Now, this is where the fun begins. Once the lender has given you your pre-approval letter, you're ready to start looking at homes. Before you start looking at homes, you'll need to sign an agency agreement with your agent. This establishes the business relationship between you and the brokerage your realtor is representing. This can be done earlier in the process whenever you decide you want to lock things in with your agent, or you can wait until before you start actually going out to shop for homes. Step number 5, making an offer. Once you find a home you like and you tell your agent you're ready to make an offer, your agent will work with you to draft an offer to purchase the property. The offer will be comprised of multiple documents, including but not limited to the residential contract of sale, financing addendums, inspection addendums, and buyer broker compensation and more. The financing and inspection addendum are included with the offer to protect you. The financing addendum tells the seller you agree to purchase the property as long as the lending institution will give you final approval for a home loan. If you remember, in step number 3, you received a pre-approval letter from the bank. It is not a final approval. There's more homework that the bank needs to do on you before you get the final clear to close on the property. If for some reason while you're under contract to purchase the home and say, unfortunately, you lost a job or your partner or spouse lost a job and you're no longer qualified for the amount of home that you wanted to buy, well, you'll be forced to back out of the deal, but you can back out of the deal without penalty. The inspection contingency tells the seller you agree to purchase the property as long as the inspection report and the condition of the property is satisfactory to you. So if there are any major issues with the home and you decide you no longer want to purchase the property, or you ask the seller to fix the issues and they refuse to, you can back out of the deal without penalty as long as you're within that agreed upon due diligence time period. Step number 6. So you found a home you like and the seller accepted your offer. Step number 6 is to submit the ratified contract to the lender and the title company. Once the lender has a ratified contract, they will send you an official mortgage application for you to complete, and they will verify the information you have provided, such as verifying employment, income, etc. The ratified offer will also go to the title company. The title company handles the transfer of funds, and they work with the bank to make sure the property is being transferred to you without liens or judgment. Step number 7, get a home inspection. Think of a home inspection and the inspection report as a bill of health of the property you're purchasing. Your agent should have negotiated an agreed upon time frame, which is typically 7 to 14 days for you to hire a third-party licensed inspector to inspect the property. I do not recommend skipping out on this part of the transaction. There are some agents that will suggest waiving the inspection contingency to make your offer look more attractive. Don't do it. You need to know what you're getting into before committing to spending hundreds of $1,000s on this home. Your agent should have 2 to 3 inspectors for you to choose from, or if you have a recommendation for an inspector from a family member or friend, you can hire them to inspect the property as well. Step number 8, get the property appraised. The appraisal is an evaluation of the property by a licensed appraiser to determine what the property is worth. The appraisal is ordered by the lender but paid for by you, the buyer. The bank will not lend you more money than the property is worth. And if they determine that the property is not worth what you have agreed to pay for it, then your agent will need to go back to the negotiating table with the seller side to get them to reduce the purchase price. Step number 9, the final step is settlement or closing, which is facilitated by the title company. Settlement can take place at the title company, your agent's office, or at the property. The seller will likely sign sometime before you do. It's rare these days for the seller and buyers to sign at the same time, but once all the documents are signed, that's it. You've just purchased your first home. Now it's time for photos, drinks. I like to capture the moment with photos and video that you can share with your family and friends and on your social media. And there's one particular title company that I love to work with that really puts a lot of effort into making the settlement experience a memorable one. So those are the 9 high-level steps to the home buying process. Hopefully I was able to simplify the process for you. If you have any further questions, send me your questions in the comment section. I'll be sure to answer all of them. If you are in Maryland or interested in moving to Maryland and you'd like to get in touch with me about your home purchase, you can schedule a free 30-minute consultation with me. The link to my calendar is in the description below.